Welcome back to another video of Back to the Basics, guys. If you have not yet checked out the previous video, make sure you go to have a look at that, is to see whether we are right for trading, what to look for in a broker. Alright, so let's move on to the next one. We'll move on to volume 2. This one we're looking at specifically sort of the chart structure. What I mean by that is we'll be looking at the different types of charts we can see, which will be a line chart, a bar chart, and a candlestick chart. Alright, so the most commonly chart used is a candlestick. So let's have a quick look into that. Now obviously, when we look at the chart, we have our price on the one side, right? And we've got our time on the other side. Price and time. Now, obviously, when you see the chart, it looks something like this, right? Now, that's kind of what you see. So we've got three different types of charts we look at, all right? So the first one we're looking at is obviously a line chart, is what we'll see. So the line chart is just a sort of a smooth line. No other structures inside of it that we kind of see in the market. Okay, so it looks something like this, right? Now the problem with a line chart is we don't really see the internal structure. We don't see the extremes in the market. The market just shows a general direction. Okay, so there's a bit of an issue when we come to use line charts. We also, like I said, doesn't show those extremes, so it's going to be hard for us to find a stop loss. Line charts are generally used to see the overall movement in the market, the overall direction in the market. So we tend to see investors use line charts because they're not so fussed about the exact highs and lows. Investing, you're looking there to hold a sort of a trade or a position more longer term. So you're not really, like I said, you're not really fussed about whether you're going to get stopped out or not. You're in there for the long run, 10 plus years, all right? So we're not going to cover too much of the line chart, but we'll focus. Let's have a look at the other two charts. So the other two charts we have are bar charts and candlestick charts. All right, so bar charts. The first one we see in a bar chart is something that looks like this. If I can draw that fairly, let me try and draw that again. So we'll see this structure. All right, something that looks along the line of that. All right, so this one's very old school. They used to use this in an old school chart before the candlesticks really were looked at. Today, in more modern times, we do use candlesticks because they were easier to distinguish. All right, so let's have a quick look at our bar chart. So this is what we're looking for, but let's have a bigger look. I'll draw a big one for you guys over here so it's a bit easier to see it. So we've got the one and the other one. Right, so looking at this, what we're seeing in these line structures, what we're seeing, this shows the open, similar to the candle, it shows the open, the high, the low, and the close, all right? So having a quick look, the issue with this is because when you see this on the chart, it's a little bit hard to distinguish where things are. Now, people get comfortable with this. People who used to trade, like I said, back in the good old days or the old school times, they do use these charts, and the eyes have adjusted to it. So really, it's what your eyes adjusted. Well, let's have a quick look at the structure to these. So we've obviously got this one we have over here is a downwards moving bar. Okay, so this bar is moving to the downside. Let's really get the colors out here so we can. There we go. So this one is moving down, and this one is moving up. Okay. Now the easy way to see this is we're looking for where side. We'll call them the levers. We want to see where the levers are sitting on these bars. So this whole structure up over here, the center structure, that we see right over here, this is the main movement in the market. Okay, so we see this here again. Now these are the levers are here on the side. Okay, so that's what we're seeing on the sides of these bar charts. Okay, that's kind of what we're looking for to see where we are in the market, what type of bar it is, and depending where they sit. So having a quick look back at this one over here, back at this downwards one, we're seeing the first lever, which comes to the right, we have over here. That is going to be our open. Open. Then we have our high point. High. We have our low. And then we have on the left, on the right hand side where it goes last, we have our close. Right, so depending on where these sit, if the right hand one sits above, we know we've got a candle that moves to the upside because we opened up on this side. So pretty much if we have a look at this entire structure over here, what we had is we had the open of the market, right? It opened up. We could have perhaps pushed the upside, we could have pushed the downside, pushed back up again, played around in the zone, pushed further down, and we moved and the market closed. Okay, so that's kind of what we're seeing happened over here, right? And now if we look at this candle on this side, again, we have our open, we have our high, we have our low, and we have our close. Okay, now similar structure, right? So we see the market after this one, so this one's closed now, we see the market open, we see it maybe push down, we see it push up higher, we see it sort of play around, pushing, the market's still moving inside this entire structure, and then the market decides to close, right? So and then it closes. And then we get that complete structure. So that's kind of how they move. Now, looking at the time frames as well, we have a quick look here at the time frames for you guys, so you can have identify a bit sort of what we're seeing. Right, so we do know that how the structure moves. So let's say, for example, we've got a bar that moves to the upside, and we're looking here, let's say we're looking at the hourly time frame, right? So if you're on a chart, you can see the hourly, you select the hourly, you've got the 1 minute all the way to the monthly. But for this example, we're looking at the hourly time frame. We see the candle open, right? It opens up, it starts to move, it pushes back down, comes back up again, pushes, you see the bulls kicking back in, pulls a little bit down, and closes. Okay, so now again we've got a bar that moves to the upside, indicates bullish movement, which means going to the upside. All right, and now what this entire candle structure indicates is, if we're looking at the hourly time frame, this indicates 1 hour worth of price movement. Okay, now if we pop it down to, let's say, to the 30-minute time frame, we will probably see we will see 2 candles in there, and we'll probably see something that could have perhaps because this is a movement to the upside, so we could have perhaps seen something that looks similar to, we see the candle open, push down, pull back, come back down here again, close, next one opens up, push bit down, back to the upside, pull back and close, right? So we could potentially see something like this, because we're now on the 30-minute time frame. So obviously there are 30-minute times 2 equals 60, which gives us an hour. So there will be 2 30-minute candles inside of an hourly time frame, inside of an hourly candle. So these 2 30-minute candles, each one of these represents 30 minutes of price movement. 2 of them represents an hour worth of price movement. Now if we go up to the higher time frames, we'll obviously see that, right? So again, we're moving on to, if we say, for example, a 4-hourly time frame. Let's say we see a candle, again a candle that moves to the upside, for example, right? So if we know this is the 4-hourly time frame, we're going to see, we will see 4 candles, 4 hourly candles inside of a 4-hourly candle. Obviously we move up on time frames. The higher we go on time frames, they obviously consists of smaller candles as well. Okay, so that's the one thing we need to know about, bars we need to know about bars. So that's kind of how they work. Now, you can see they look a bit confusing, and you really have to look at it, because sometimes on the chart, you'll see something like this. Okay, so it's kind of difficult to see. It doesn't really make too much sense. It's a little bit hard to see. You can kind of see, yes, the market's in an overall sort of maybe uptrend, but I can't quite see what's going on. I can't analyze the market. Now, maybe if you're a swing trader and you don't really look for these sort of structures, maybe you're just looking for support/resistance zones, then yes, you can use it. Okay, so you can see, okay, well, we had a close there. The market rejected the zone. Maybe I can start looking for moves going to the downside. But if you want to look for potential rejections in the market, to know when this market rejected, whether it's just going to break through and push further higher. I want to see the candle structures, be a bit more in depth in the analysis. We could use candlestick charts, right, instead of using bars. So candlesticks work pretty much the same. Pretty much work the same as bars, but they're a bit more colorful, really, and that's what we'll be looking at now. So quick look here at the candlesticks. Okay, so like I said, they move exactly the same. Let's say, for example, we have a bullish candle going to the upside. So there's other 2 terms we need to understand. So a bullish move means the market's going up, and a bearish move means the market's going to the downside. So if you hear people talk about the bulls and the bears, they're talking about the buyers and the sellers. All right. So that's just the one thing you can kind of think of when a bull attacks. He uses his horns and pushes up. So a bull attacks from the up, from down and pushing up, and a bear comes down onto its target. If you want to think of it that way, that's a pretty handy way that I learned how to how to use, how to identify bulls and bears. All right. So that's just a quick thing. Another one you want to keep in mind of, another bit of a terminology we want to keep in mind of, if someone talks about a long position, long, they're talking about a buy. If they're talking about a short sell or a short, they are talking about a sell. So short equals sell. Okay, that's just another term. This came back from a very, very long ago. It's been used because what they do is they call it a short sell or a short position, as just when they start to trade, when shorts sort of, or when sells first sort of came out, and they just use this term. A little bit confusing, but that's pretty much really easy to remember. So if you ever hear someone talking long and short, buy and sell, pretty easy. All right. So let's have a quick look at these candlesticks. So like I mentioned, candlesticks follow the same rules. Each candle represents a time frame. So if you're looking at the hourly time frame, you're looking at a candlestick represents an hour's worth of movement. If you're looking at the 4-hourly time frame, it represents 4 hours worth of movement, and so on and so on. All right. So a quick look at a bullish candle or candle to the upside. So what we'll have, let's just get a green out. Generally, what I like to have is I like to have my candles to the upside, my bullish candles, I like to have them green, and I like to have my bearish candles to the downside, I like to have them red. All right, just a bit of an indication, just color uses a bit better. Okay, so this is sort of what we'll see a candle look like. Now, if you remember those bars, it's very, very similar. Okay, it's just a bit easier to follow. So I'll just quickly color this in as well for you guys, just to make it a bit easier to see. Taking its time. There we go. All right. So we'll see something. This is what you'll be seeing. Now you can have your colors of your candles a bit different if you'd like. If you like to have the outline black, that's perfectly fine. I like to do this as well, to have my outline black, because it helps me see the wicks and the sort of the base structure of this candle a bit easier. But if you want to have it green or whatever color, whatever makes it easier for you to see, that works. It's really about your own personal choice. So this is the kind of structure I like to prefer, because I can see sort of where wicks are moving, instead of it kind of just blends in if you have the same wick color or the same base, the candle outline color as your candle, because you guys can see blends in a bit, but this really pops out and the color clearly indicates which way the candle is going. All right, so this is a very, like I said, very similar structure to the bar. We have our open, we have our close, we have our high, and we have our low. Now let's say we're looking at the 4-hourly time frame. So this candle represents 4 hours worth of price movement. Okay, so from the open to the close, 4 hours of time frames. All right. Now let's say we're looking at similar candle structure to the downside. Actually, let's get this. We'll get the red out. Okay, so the red candle, again, very similar, but obviously just to the downside. Okay, and we have the same setup. So we have our, on this side, except because we know it's a downwards candle, we have here, we have our open, we have our high, we have our low, and we have our close. Right? So what this means is, because we have an open on this side and we have a close up there, so it opens and closes there, so it's an upwards moving candle. Because it opens over here and closes back down here, we have a downward moving candle. All right, and we can use these to indicate sort of where the market's going to push, or what the market is telling us. Right now, a lot of people want to use fundamentals to trade, which is perfectly fine, but I'd like to use candlesticks or any technical analysis to help me identify what the market is doing. All right, now these are our basic candle structures, but you guys can obviously see there's a bit of that in there as well. Those little, so we call those dojis, and what they represent is uncertainty in the market, right? So this is sort of the structure that we have in a doji, right? That's all we generally see. Maybe it's not this, maybe you do have a bit of a body in it, if not, or you might have the body to the upside, but generally what these have is what we see here. I'll quickly show you guys. So we have our open, we have our high, we have our low, and the close is very close or very similar to the open price. So we have our close. Now this indicates that there's uncertainty in the market. The market doesn't know where to go. Now, looking at the different candle structures, or if you want to look at bar structures, you know, they all indicate a certain type of thing, right? So we can clearly see it's a downwards bar because of where the levers are sitting. The market is moving to the downside, and there's a fair bit of price movement between the open and the close. So the bigger the price movement between the two, so the bigger the distance between the open and the close, the more power there is. So obviously, if there's a big green candle, for example, we know there's a lot of buying power, a lot of bullish power in the market. There's a big red candle. Obviously, what that means is there's a lot of selling power, a lot of short power, a lot of bearish power, okay? So we know that the sellers are in control on this side and the buyers are in control. But over here, this indicates uncertainty. So no one's in control. We saw the buyers try and kick in. We saw them trying to push the market higher. They failed. We saw the sellers try and kick in to the downside. They failed. And at the end, it was a tie. And no one really knows where the market can go. Now, we can use this to our advantage, right? Now, how do we use all this information over here to our advantage? Let us have a quick look how we can use this. Okay, so knowing what the market structure is going to look like, let's get I'll get this out actually. So if we see, for example, a move that goes to the upside, okay, and we're starting to see slowing in the market. Right, what we're seeing here is the buyers are starting to lose their control, right? Because we saw in the start we had a lot of strength to the upside, and they're starting to get smaller and smaller and smaller, less power because obviously this distance between the open and the close is starting to decrease. Big distance, we start to see this decrease between the two, which means the buyers are starting to lose control. Okay, sellers are slowly starting to kick in, and we get, for example, a doji that looks like this. All right. Now this means the buyers have almost lost all their confidence. They're uncertain in the market. They don't really know what's going on, and the sellers have started to come in, trying to decide whether the market can, whether the market should continue to the upside or to the downside. Now there are two things we want to look for when this happens. Right. We either want to see the bulls retake control with a nice green candle to the upside, which means, okay, uncertainty is over. The bulls decide to take control again. Or this means we can generally look for the market to move further higher. But if we see something like this, we need to keep this in mind. If we see a small little red candle like this, this could also indicate the market could continue to the downside, right? There is a chance, because now we see the sellers are starting to kick in. That is, however, on the equal level, so we know, okay, well, it's pretty much the same strength as that previous green candle, so there's not really too much power to the downside, all right? There's not really too much power to the downside. So what we want to ideally look for is an engulfing candle, right? So engulfing means it takes out previous candles. So let's say we saw this open, we saw the market open, we saw it push a bit higher, and then what we saw is we saw this. Now this is a pretty decent indication that the market is ready to go to the downside, especially if you're sitting at support and resistance. We'll cover that as we get it deeper into these videos, okay? We'll talk about support and resistance. But for now, just for argument's sake, let's say we're sitting in a massive resistance zone. The market's rejected. We saw the bulls lose control. They're getting uncertain. That we always look for this curve in the market when we see these sort of structures. They're losing control, losing uncertainty. We see the uncertainty kick in, and then we see the bears taking over. Boom. Lots of selling pressure coming. We've taken out 2 bull candles. 2 of these have been taken out, which means there's absolute, complete control of the sellers, which this could indicate, okay, now we are ready. We generally will see in the market, we could see something like this. We could see the candle open. We could see the bulls trying to regain a bit of strength, generally reject inside one of these candles open and closes. Again, those are support and resistance. Like I said, we'll talk about that more. Sitting around these zones, we could see a reject and then we could start to see the sellers taking over in the market. Okay, so that's kind of how we can use these candles. Now obviously for your bars, it's very similar. We'll see sort of similar structures. We can use it the same way. Right, same structure, just so you guys can see this. It's almost just a little bit harder to see what's going on when this starts to kick in. This is very clear to see, but it's a bit harder to see when this starts to kick in. Now again, we have this nice big push to the downside. You guys can see again, it looks fine, but if you look at it, which one, I mean, it's up to you. It's not really, it's not, but for me, when I look at the chart, when I stand back, I kind of look at it and say, okay, well, this one's a bit easier to see. I can see these movements a lot better. I can see the color obviously helps me a bit. And these they're fine, but again, it's a little bit more difficult to see. And then obviously we have that big rejection, push the downside, candle closes, all right? So very similar structures. They both work the same. Personally, I prefer this. So again, whichever one you prefer. Now looking at a line chart, what we'll probably see is something like this. Okay, and that's what we'll see in a line chart. So you can see, really a line chart doesn't indicate much, right? It doesn't really help. We'll have a look when we jump over to the charts eventually. I'll have a quick comparison of the three, so you guys can have a look and see which one you prefer. But you'll see the line chart doesn't really show a lot. It doesn't give you a lot of indication the market's slowing down. It doesn't really show much at all, all right? So these are the different kind of charts, guys. Line charts, candlesticks, bar charts. Guys, make sure you like and subscribe to these videos. We'll be releasing a lot more, getting more into depth, taking it a bit more advanced step by step, looking at the different things, guys. Make sure to subscribe to the Back to Basics. Hope you guys enjoyed it. If you have any questions, let us know below in the comments. And from everyone here at BlackBull Markets, always stay tuned, trade safe.